Hey Alex, this is Ryan with TrendLizard.com. I hope you're having a good weekend. Thanks for sending me an email. I'm going to take a look at a few tickers for you. These are some pretty hot stocks here. Virgin Galactic, SPCE, as well as NIO and AMD. The three that you requested, the three that I will take a look at for you, starting with Virgin Galactic, SPCE. So this guy was incepted back in 2017. Really didn't do anything for a few years. Tanked in late 2019 and then went to the moon from about 6 up to 42. Gave that back all very quickly and has been more sporadic and chaotic since then. So from a long-term perspective, it's hard to be super excited about this guy, and I'll just tell you why. I love the 5-wave advance, obviously, in late 2019 and 2020, but it gave back nearly all of that almost immediately. It retraced over 61.8%. 61.8% is represented by the bottom area of this yellow support area. And it just blew through there, retraced it most of this up leg, so any goodwill it earned from this 5-wave advance here was removed by this sell-off here. And then the other thing I don't really like is the look of this recovery effort that's gone on in 2020. So we're going to take a closer look just at this more recent action here to show you what I'm talking about. The decline in early 2020 could be labeled either way. Hard to be committed to it either way. It could be labeled as a trendy move. But what is more clear is the action off of March's low. Sure looks like a counter trend mess to me, my man. It just doesn't look like trendy, sustainable upside movement. You look at that first up leg in March into April's high. It's a 3-wave move. You look at that move from March into July's high. Looks like a 3-wave move. Really the cleanest thing about this entire move is the decline from July to September. That looks like a trendy 5-wave move. I don't think it is. I don't think it's the start of any major breakdown. But all this thing is doing is going sideways. It looks like a larger counter trend affair, which eventually should give way to another sharp down leg. I don't know when. I mean, it's just a counter trend mess, so it's hard to pull anything out of this guy. But from that perspective, I can't trade it. It's something, a stock that I have watched because it was rocking so hard in late 2019 and early 2020. But it's not a buy for me just because of what's happened since then. This is a counter trend mess. There's really nothing we can do with this kind of stock for me. Wish I was more helpful on that one, but that's what I have for you on Virgin Galactic. So let's go ahead and take a look at NIO. NIO is an absolute stud. It has been one of the market leaders in 2020. It was incepted back in 2018, spent most of the time in a downtrend until late 2019, stabilized there, and has gone on a tear. From I don't even know how low this was. I think around $1 up to about 55. Super volatile. Big up days, big down days. Definitely a ton of action on this guy, and it continues to look bullish. It looks like it's in a 3rd-wave advance. It looks like an extended move. But I'll be honest with you, when you have a move that is this extended, it's pretty difficult to find a labeling that you can be absolutely confident in, just because it never really gives you that true pullback. It just keeps going to the upside, so it makes it harder to find a close stop level to trade a stock like this. Nevertheless, let's zoom in and I'll show you what I came up with on the Elliott Wave labeling. This is a different point of view here, just taking a look at that same advance, and the reason I did this, I put this into a linear scale just to give you an idea of just how sharp the advance has been in 2020 and why I do believe that it is nowhere near completion. If we're looking for a completed 5-wave move, this isn't the type of stuff that happens near a high. This is the type of stuff that happens in a 3rd-wave advance. So from that perspective, it looks bullish. It's just hard to be super confident again in the labeling, but this is what I've come up with. It looks like a series of 1st and 2nd waves to the upside. It looks like those are starting to unravel with 3rd and 4th wave pullbacks as we go. I don't believe this is over. The difficult part, again, is finding a stop level that's close enough that makes this an interesting trade from a risk-reward perspective. So let's zoom in again one more time off the 2019 low. Again, this is why I've come up with that 1st and 2nd, 1st and 2nd, 1st and 2nd wave progression that's gone on since late 2019. It looks like the big pullback that happened on Friday on November 13th is another small degree 4th wave pullback that should lead to higher prices, but here is the major problem. If you're looking for the area where this 4th wave pullback technically could go without doing anything wrong, it could move as low as 28. It's trading at 44 right now, so you're talking about a huge vacuum of value there that would happen before it even does anything wrong. So that's the difficult part. However, I don't think it's over. I think you're going to get higher prices. I just don't have a good stop level for you because you don't want to put a stop down at 28. I'd let this pullback play out, but I think overall you have to expect the development of a larger 5-wave advance before it's said and done. So let's take a look at one more chart here. This is just looking at the most recent action off of September's low. This is the 5-wave move I have. I mean, basically all this thing does is find a way to go up. It goes through sideways counter trend pullbacks. Recently the pullbacks have been a little bit sharper, but every single one of these down moves have been quick and have found a way to return to the upside fairly quickly. So in that respect, it's easy to be bullish. It's just hard to find a good stop level. A move above 49 would be a good indication that higher prices are still on the way. And again, let's just jump way far out here. It just looks like it's not over, and it has more upside progressions to go to complete that big 5-wave move. So that's what we're looking at on NIO. Let's go to that last ticker that you sent me, AMD Advanced Micro Devices. It was either you or somebody else that I had taken a look at this stock before, but it is bullish, absolutely. I mean, it's spent much of its time since its inception back in the early 80s, trading sideways, back and forth, choppy, into the 2015 low. That's when everything changed. It has embarked on a very large advance since then, trading from a few bucks all the way up to 95. It's pulled back off of that all-time high more recently, but it's still bullish overall. Absolutely. So let's go ahead and zoom in and take a closer look at this advance off the 2015 low. This is it. As you know, when we're dealing with trendy moves, we're looking for 5-wave moves. So when we look at this advance off of the 2015 low, the goal is to find a 5-wave move. And when we do that, we see that it does not look like it's over. It looks like it's going to head higher. It looks like we had a first wave into the 2017 high, a second wave pullback, and it's been in a large third wave advance that is not yet over to the upside off that 2018 low. So let's zoom in again and take a look at the finer details of the more recent action. You can see it all counts out very well. 5-wave action to the upside. Maybe one of the more interesting aspects of this entire move is what's happening now off the 2020 low. You have a nice up leg, you have a counter trend pullback, you have another nice 5-wave up leg, and then a very similar counter trend pullback, similar to what we saw back in March, April, and May. And you see what happened when you had that counter trend pullback last time. It shot higher. We expect something similar this time. Higher prices have to be expected here. We do appear to be in the later stages of the third wave advance that started back in 2018. But for now, you just have to expect higher prices once this counter trend pullback off of September's high completes. Let's go ahead and zoom in again. This is a closer look at that 5-wave advance. You can see the counter trend nature of the current pullback. Clearly a 3-wave move. It has to be expected to continue higher. The biggest question that you have to ask on a near-term time frame is, did the pullback off of September's high complete in early November? Is it ready to resume its uptrend, or is it still in a larger counter trend pullback off of that high? And here's how you determine that. Here's that pullback zoomed in off of September's high. If a low is in, if the late November low represents a low to this pullback, and this is the start of the uptrend, it really should not return to last week's low, which occurred around 78. That's major support. That's around a 61.8% retracement of the early November up leg. So if the uptrend is going to resume, it needs to stay away from this area. If it heads back there, I think you have to consider it a continuation of this large counter trend pullback and expect it to move back down into this yellow support area at some point. However, if it can stay off of that low and continue back up to last week's high around 87, it's going to look bullish. It's going to pave the way for a much larger advance, potentially the start of that 5th wave up to new highs from there. So, Alex, I hope that's helpful. Thanks again for being a member of TrendLizard. Anybody else who's looking for more information on Elliott Wave theory, come visit us at trendlizard.com, and I'll do the same type of analysis for you. Have a great weekend. Y'all take care.